Good morning, students of class 12. Now, I would like to start cash flow and cash flow statement. This chapter is cash flow statement is the last chapter of part 3 of accounts. Third part book. First of all, what is the meaning of cash flow statement? Cash flow statement is a statement that shows the flow of cash and cash equivalent during the period under report. Cash flows are inflows and outflows of cash and cash equivalent. Transactions that increase cash and cash equivalent are inflow of cash and cash equivalent, and transactions that decreases cash and cash equivalent are outflow of cash and cash equivalent. Cash and cash equivalent include cash and bank balance, marketable security, etc. You mean that assets can be converted easily into cash is known as cash equivalent. Like any type of bank balance, security, in securities investment like fixed deposit, term deposit, cash balance in current account or any other account. You mean if cash or that kind of cash which can be immediately converted into cash is known as cash equivalent. Cash and cash equivalent include cash and bank balance, marketable securities, etc. unless specified otherwise. Current investment are considered as marketable securities, hence are included in cash and cash equivalent. As for example, we can say that under cash inflows will cash sales, cash received against trade receivables, cash received from commission or royalty, insurance claim received, cash received from sale of investment other than marketable security, cash received from sale of fixed asset, cash received from sale of security, loan and advance receipt, proceeds from issue of equity shares, proceeds from issue of preference shares, and proceeds from issue of debentures. Means all transactions through which the balance of cash and cash equivalent will increase in the business enterprise is known as cash inflow. Now the next example of cash outflow means those transactions through which the balance of cash and cash equivalent will decrease is known as cash outflow, such as cash purchase, cash paid against trade payable, operating expenses paid, cash purchase of investment, cash purchase of fixed asset, loan and advance given, loan and advance repaid, repayment, payment of buyback equity shares, payment of redemption of preference shares, or payment of redemption of debenture. Means all with these transactions, the balance of cash will decrease in the business enterprise. So these transactions are known as cash outflow. Cash flow statement is prepared according to the accounting standard 3. Cash flow statement, the accounting standard requires cash flow statement to be prepared showing cash flow under three heads, which is known as by the name of cash flow from operating activity, second cash flow from investing activity, and third cash flow from financing activities. Now, what is the objective of cash flow statement? The main objective of cash flow statements are to ascertain the source of cash and cash equivalent under operating, investing, and financing activities by the enterprise. Second, to ascertain applications, payment of cash and cash equivalent under operating, investing, and financing activities by the enterprise. Third objective is to ascertain net change in cash and cash equivalents, being the difference between source, that is receipt, and payment. Receipt and payment, or source and application under operating, investing, and financing activities between the dates of two balance sheets. Now, what is the importance of use of cash flow statement? There are various use of cash flow statement. First, short-term planning. Cash flow statement gives information about sources and applications, receipt and payment of cash and cash equivalents for a specific period. It helps in planning investment and assessing the financial requirement of the enterprise. If a business enterprise would like to invest other than that business enterprise, then this cash flow statement is very useful, very helpful, and assessing the financial requirement of the enterprise. If that business enterprise would like to enhance their business activities, then for development of their business, they may have extra requirement of fund, and that can be assessed by the financial requirement of the enterprise. Second importance of cash flow statement is cash flow helps in assessing liquidity and solvency. Solvency is the ability of the enterprise to meet the liabilities one time. Means a business enterprise having different type of obligation, different type of loan and debt, so that on the basis of solvency ability, they can meet their liability one time. So cash flow statement helps to assess liquidity. बंद कर दो।